Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, May 3rd, and S&P continues to fade away from what was a sell-off on the 1st, sold into the strength. Now we're seeing lower prices. We have the jobs report tomorrow, which should help move this market and give us some sense of direction, because right now there is none. And as a market participant, you shouldn't be overloaded to the long side or short side right now. And if you are, you have to question yourself and what's your time frame. And if you have a 5 to 10 year time frame, then these squiggles matter less. You know, these intraday ranges is where I'm trying to get at. They matter less than if you have a time frame of a 3 month or less time frame, or even 6 to 8 months, 6 to 9 months. And the reason why is because the market could be topping out, or this could be the pause that refreshes and we make new highs. So it's going to be important to watch this market over the next, in my opinion, over the next couple of trading sessions, probably starting with tomorrow, to get some sense of direction in what way the market wants to go. So looking at the S&P here, that lower high that we made, we have true resistance at 1404, which was the next day's high. We haven't got above that level since, so that's definitely true resistance. And we also broke through some of these lows that were tradable lows over the past couple of days. We broke through that, and we are at what could be the most important level right now, and that is the monthly point of control for April. You can see right now we're literally at those levels. We're trading there. What you would want to see from a buyer's point of view is tomorrow, at some point, this market needs to press back up towards 1400, in my opinion. And that's not that big of a move, but you want to see today's price action retraced in some way, shape, or form. If that's not the case, and the market breaks below this 1383 level, you're going back down, and we're going to press the levels. Well, first things first is you look at 1376 to 1379. So let's say 1376 to 1383. That's kind of your wiggle room in the market. And if we hold those levels, then you still might be okay from the long side. But if we don't, and we break below and we start trading sub 1376, 1377, you should see this market go down and test 1365, which is the point of control for this broader range. It is also clearly, it has been support for these lows made in April, and we will see if there's enough demand to reverse this market and push it back above 1400. What you should be noting is right now, as in right here, right now, we do have a lower high off of this most recent swing, and that is a sign of weakness. That's showing you that the demand for the market is basically running out. And if this is the case, and you can see by today's price action, the selling pressure is picking up some. So that's something, obviously no one wants to go in too long or too short into the jobs report, just in case. But at the same time, at least you have your reference point. From the long side, it's clearly down to this lower end of the range, somewhere within this range. Maybe it's below the 26th intraday low, because the last time the market came down and tested this big body on the 25th was on the 26th, and this was the maximum amount of selling pressure from the sellers, and then the buyers brought it up as high as 1412 or so. So that's something to be noteworthy of. And if we trade back up to the top end of the range here, this could be a consolidation from a lower base, and you could see a push out of the upside. But if we do push lower, I would really be focusing on this 1363 level, that point of control for the month of April, and see where that takes us. The euro, I'm sticking on this small time frame because that's all that really matters. The euro, we have this triangle pattern forming, and it looks similar to the S&P, but what you're seeing is a series of lower lows and lower highs and lows that are, generally speaking, you can make their argument they're basically in the same spot. 130 though, that's the key, and the euro, if it were to break below that, you would have to assume would see some type of push down towards, or attempt to move down towards 126, which were the lows of the beginning of the year. The only thing that you can say about the euro is, in my opinion right now, if you were to go long, but this is something that I'm short, you place your stop under today's intraday low to go long, just because you assume, and of course it's not, this is part of trading, but if this trend line support holds, and I see it was breached prior, but given the tail that we've seen from today's session, from a buyer standpoint, in my opinion, you wouldn't want to see it drop lower than that point. If it does, you keep your eye on it, and if it reverses again and gives you a tail like this again, maybe you try it again. But I wouldn't be taking excessive risk on euro long. I think it's much easier to go short, and so far it's proving to do so since I sold on the 1st of May. The dollar, what the first thing that I see when I'm looking at this chart is you have your major high, and then you have a lower high and a lower high on both sides of it. So I'm sure there's talk of some type of potential head and shoulders pattern. It's hard to draw the neckline, but I'm assuming it'd be around these current swing lows. What you have is a currency that's bouncing off of these lows right now. So you have your stop, you have some point of reference for the dollar right now, and so far from the short side, the only thing you would have is above today's intraday high. Other than that, there's really nothing, because you haven't had a lower close of any sort yet. You haven't had a lower intraday low. So it's hard to get excited about the downside on the dollar, as in right here, right now, in the next 5 days I'm talking. That could change if we get a strong jobs report tomorrow. Perhaps people sell dollars and they get a little more comfortable with the risk appetite. But if it's a weak report, there's a lot of talk saying that the markets will rise on the potential of QE3, but I don't think that's the case. I think the argument is, if the jobs report is weak, the economy's slowing, and it's globally. It's Europe, it's the United States, it's Australia, it's China. This matters, and I don't think there's enough, I guess you could say, opportunists that believe this market, or I should say, that are willing to put their money on it, that this market, it will start pricing in QE3. Now, with that said, I think there is a put in this market, meaning if this market goes much lower, there's going to be risk appetite for people to start diving into the markets again, to the long side. And if I had to guess what level that is, I would go with a break even on the year for the S&P, which I believe, here's a year-to-date chart. So you would be looking at 1270 or so as a potential target. So let's kind of summarize that. The S&P clearly in an uptrend, but most recent action is troubling. You have what looks like, for now, a lower high, and then you have your solid support. In April, you had your lows as low as, looks like, 1353. 1363 is your point of control for April. So if you want to see some type of higher low off these levels, potentially 1363, in my opinion, is your last line in the sand. So You're either looking for a rollover here or a market that wants to go and push up towards new highs. One other level that may be worth watching is this 1340 level. That was the point of control for February, and it was also the lows from the, I guess, second most severe pullback, excluding this one. And we saw a very nice rally off of those lows. So that's another level to be watching. Gold, it continues, the sell-in strength continues, which makes me, this right here, and we've seen it since February, but this most recent price action, which has been in a relatively tight range, has shown me that the buyers of gold aren't as strong as I perceived them to be. I was expecting gold to have more of a bid under it, and we're not seeing that. In fact, we see a potential for 3 lower highs. You could even make the argument all of this is just one big downtrend since the big sell-off on the 29th. So this is something to be careful about. The point of control for the year is right at 1666, and we're selling off of those levels. Just like, let's see, the euro, point of control right at these levels for the year. The dollar, right at these levels for the year. So this is an important time in the market, and you're going to find some sort of resolution. The only thing that's lacking is the S&P 500. With that said, every day that goes by over the next month or so, or even 2 months, this price action disappears, which will fluctuate this volume profile chart. Then we will see more accurately the influence of the current price versus what we saw back in late of last year. So that's something worth waiting for. And as of right here, right now, well, let's find out. This is what it would look like. You can see this 1365 level. It's almost the point of control for the year. So really, I'm making this call now. What I would expect is a trade down to that 1365 level. It's going to become the point of control for the year, and then you're going to see the market, the euro, the entire global market, react accordingly. We have gold, we have the S&P 500, the euro, Canada, as in the Canadian dollar, 6C. I'm pretty sure, yeah, at the point of control for the year, the U.S. dollar. So everything's lining up to see a big move, and you need to be aware of this. You need to be in a comfortable state where you're not at risk one way or the other too much. It's not worth it. The move that we're about to get in the market will be sufficient enough to make gains one way or the other. Now, considering we've been consolidating for 3 months or so in the S&P, going on 3 months, shows you that there's been a lot of, we're not trending anymore, and that should be sufficient enough to see some type of breakout one way or the other. If you're breaking out to the downside, your targets are 1310, 1340, 1310, and then basically break even on year. And whichever way the market goes, it goes. But participate in it. Plan. Write out a plan. If the market breaks out and shows us, the buyers show us the market wants to go higher, how am I going to play that? And make sure you have your plan of attack so when the time comes, you're not scrambling. Just like if the market sells off, are you going to try to play that to the downside? If so, what are you going to do? Are you going to buy put spreads on the S&P 500? Are you going to sell S&P futures? Are you going to short cyclical names such as Freeport-McMoRan, which is falling away, down 3.25% today, falling off its point of control for the year? Similarly, Cliffs Natural Resources, it's falling away from its point of control for the year. I'm just looking at this because I'm curious. Walter Energy, I think this is a name that you can sell too. too many people, in my opinion, are leaning on Walter Energy to the long side. I think you look at today's intraday high and you can sell against it. If the market shows us it wants to move lower. These are for opportunities to the short side. Now, my way to play it would be buying put spreads, maybe buying outright puts, because that way your risk is managed, and when your price target is hit, meaning that shorter strike, you can go ahead and take the risk off. But if it's to the long side, really anything's going to work, but I would stick with high quality dividend paying stocks. So really that's all I have to say. And just to look quickly, the NASDAQ, we're getting a lower high here, and the Dow, not DM, not DY, YM, I'm sorry, brain fart there. The Dow, what we see is a flat top. Yes, we made a new high for the year on the 1st, but we also have point of control for the year at this 12,975 level. That's worth paying attention to. So take care, have a good night. I hope this helps. Please plan out your plan of attack and develop a thesis, because I think we're close to having a multi-month opportunity here, which means we can make a lot of money, and that's what it's about. So take care, have a good night, talk to you tomorrow.